I bought puts on Lucid Tuesday the 7th, right before the market closed, giving me just 3 days for my idea to be correct. I ended up making 89% on that trade. And I want to talk to you though about why I did that, because I think Lucid has some great technology, some beautiful cars. I've driven the Lucid vehicles. But as we go through on this channel, the due diligence on some of these tier 2 companies, what I call tier 2, EV companies that are in production but not yet making money, I'm going to share with you my thoughts on how I'm going to trade it. I have never owned stock in any of these companies. I've been telling you guys consistently for 2 years, wait on these companies because they're going to lose money for several years. And I don't know that my thoughts on that have changed, but there's still some opportunities to make money on momentum. Wall Street was expecting a loss on Lucid of 40 cents per share. It came in better than that at only negative 28 cents a share. As far as operating loss, it came in at negative $753 million, which sounds horrible, but Wall Street had been expecting negative $830 million, an $830 million loss. So what really happened here? The biggest issue was that the sales came in light and they cut their guidance. So sales came in at 138 million for the quarter. Wall Street had been expecting 178 million. It's a $40 million gap. And the other thing is Lucid had been forecasting for 2023 production of 10,000 units, cut from the beginning of the year. Their goal was 20,000 units. They cut it down to 10. And now here on Wednesday of last week, we got another update. Now production is going to be between 8,000 to 8,500 units. That is a steep cut. Wall Street did not like that at the end of the week. And we saw Lucid melt down Wednesday after hours into the end of the day Friday. If we go back to when Lucid had the SPAC merger process, remember they were telling us back then in 2021 that in 2023 they were going to produce 49,000 units, 36,000 sedans, and 12,000 SUVs. So we got a drop from 36,000 down to now 8,000, and we have no SUVs. In fact, the Gravity, the SUV that's going to be announced and debuted on the 16th at the LA Auto Show, is not going into production until late 2024. So we basically have a whole year delay from what we've been expecting for 2 years from Lucid on the SUV. And we all know that SUVs are very popular right now. They are a hot selling item, and this delay is not doing Lucid any favors. You can see in my tracking database here that Q3 production ended up at 1,550 units. 1,457 were delivered. That brings the year's production to 6,037 units. And with their stated goal of 8,000 to 8,500 units for the year, they've got somewhere between 2,000 and 2,500 to produce in Q4. Now, in Q3, there were an additional 700 units produced that are not included in that 1,550. They were shipped not fully assembled over to Saudi Arabia, where the assembly will be finished, and those units will be counted in Q4. So somewhere under 2,000 is what they're going to need to produce in the United States in Q4 to meet the 8,000 to 8,500 unit production goal. Let's talk about the dashboard real quick. My visualization to you about my perception of the risk for investing in Lucid right now, and talk about some things that changed. The earnings per share momentum flipped from yellow to green because they did get a little bit better earnings in Q3 than in the previous quarters. It is showing some tendency to improve. Return on equity is still negative and red boxed on Lucid. Debt to equity and current ratio, both are okay, both in the green. Revenue growth rate, bottom left-hand corner, that will get updated when we finish Q4. The dilution risk, I'm still worried about Lucid over the next 12 months having to raise some additional money due to their high rate of cash burn. And the short interest continues to remain a red box at 28%, according to the latest estimates from Ortex. Now, according to Lucid's slide deck, they say that they have sufficient liquidity at least into 2025, and that may be true. We'll look at the balance sheet in just a second, but that is also going to be dependent on their production volume in 2024 and their unit sales. And we will get some updates from them on their projections for 2024 in Q1. So we still have some time to go until we get a glimpse into how 2024 is going to look. Stay tuned. Revenue came in, as we mentioned earlier, at 137 million. I don't like to see these declining bar charts on these EV startups, but it is what it is right now on Lucid. They made a choice to go into the very, very high-end, high-priced luxury sedan market, and they don't have the benefit of having an SUV to go along with it. And then on top of that, we have the difficult market conditions, both with car sales declining, EV sales declining, and interest rates being high. Free cash flow is negative 706 million. Gross margins, negative 240%. Operating margins, negative 546%. Profit margin, negative 457%. This all sounds bad, and it is, but this is part and parcel of being in a auto startup company, an EV startup company. They're going to lose money for the first couple years, which is why I have not been investing in them and why we need to watch very closely and not jump in until we start seeing some real turnaround in these numbers. I don't want to be trying to catch a falling knife, and I think you got plenty of time to be patient on some of these tier 2 EV companies. Looking at the balance sheet, you can see that cash and cash equivalents are at $4.4 billion. Total current assets, including receivables and inventory, at $5.3 billion, just under $5.4 billion. Total current liabilities, $1.0 billion. And this current liabilities being much lower than the current assets is why they get a green box on the dashboard for working capital, i.e. the current ratio. Long-term debt for Lucid at $2 billion. And we can see that they still have a positive shareholders equity of $5.4 billion. There are certainly plenty of things we could dive into if we wanted to spend an entire day doing a deep dive on Lucid's financials, but really right now, the only thing you need to keep in mind is everything for Lucid coming into next quarter and really the next 5 quarters is all going to be about production and deliveries. So you're going to need to watch that very close. You're going to need to be very careful about any investment you make in Lucid. If production and deliveries over the next 1, 2, 3, 5 quarters come in lower than expectations, this stock is going to struggle. If they have some beats or if the market improves and interest rates get better, then you could see Lucid go up a little bit. I think it's very, very early to call. And I want to leave you with one parting thought. As Al Root points out in his article in Barron's, buried at the very bottom, when we're comparing valuations of these companies, let me find, here we go. Lucid is trading right now, after you adjust for debt and cash, at 9 times estimated 2024 sales. Rivian, on the other hand, is only trading at 2 times estimated 2024 sales. Tesla, for comparison, is trading at 6.7 times their estimated 2024 sales. So as someone who doesn't own any of these tier 2 companies, I don't own Rivian, I don't own Lucid, I'm trying to decide if I want to invest in any of them. I've driven all of their vehicles now, both the Lucid and the Rivians. I am going to be keeping in mind the valuations relative to each other, relative to Tesla, and I'm going to, for all of them, be watching the production and delivery numbers very, very closely, because that is going to drive the financial statements, and that is going to drive the price of these stocks. We will be back together in just a couple days to talk some more Lucid after they do the Gravity reveal, the SUV reveal at the LA Auto Show on November 16th. I look forward to talking to you then. I am Tony Denaro, and I will see ya on the next video.